Hello everyone. Welcome to another insightful episode on Bonis Life Channel. I'm Boni. In this episode, I provide you a comprehensive cryptocurrency market analysis for the past 7 days. This report provides a deep analysis of the developments within the cryptocurrency market over the 7-day period from April 23rd to April 30th, 2025. It synthesizes information gathered from major news outlets, crypto-specific publications, market data platforms, and statements from influential industry leaders. The analysis covers significant announcements, news releases, regulatory updates, technological advancements, market trends, both technical and fundamental, and the prevailing sentiment within the crypto space. The objective is to offer a detailed examination of these developments, linking them where possible to fundamental drivers and technical market patterns, while also assessing the reliability of the information presented. The cryptocurrency market during the past week was characterized by a continued strong push towards institutional adoption and the tokenization of real-world assets, prominently led by traditional finance giants like BlackRock. This fundamental narrative provided underlying support, although markets remained sensitive to macroeconomic news and ongoing regulatory uncertainty. Key developments included BlackRock advancing its tokenization initiatives, Coinbase expanding its Layer 2 network-based vision and stablecoin partnerships, and Ethereum outlining significant technical upgrades for 2025. Influential figures like Michael Saylor and Cathie Wood reiterated highly bullish long-term Bitcoin price targets, citing institutional inflows as the primary catalyst. However, the regulatory landscape remained mixed, with potential progress on U.S. legislation contrasted by SEC, delays on certain ETF decisions, and continued scrutiny. Technical analysis showed relative stability for Bitcoin and Ethereum over the week, despite a notable dip coinciding with negative U.S. economic data, highlighting the market's increasing correlation with traditional finance. Overall, while short-term volatility persists due to macro factors and regulatory ambiguity, the underlying trend of institutional integration and technological maturation continues to strengthen the long-term fundamental outlook for the sector. Major news developments: April 23rd to 30th, 2025. The past week saw a mix of regulatory developments, institutional moves, and market reactions. Key news highlights include ongoing discussions around U.S. crypto legislation, with advisors suggesting a potential completion target of August, although the SEC continued its cautious approach by delaying decisions on spot Dogecoin and XRP ETFs. However, ProShares received approval for XRP futures ETFs, and Nasdaq filed to list a spot Dogecoin ETF, indicating continued efforts to integrate crypto into traditional finance. South Korea also signaled a move towards allowing spot ETF trading for digital assets. Regulatory scrutiny remained evident, with the Crypto Council for Innovation pushing back against the SEC potentially classifying staking as a security, Coinbase engaging in a Supreme Court case regarding IRS access to user data, and the DOJ seeking a lengthy sentence for the founder of bankrupt lender Celsius. Reports also highlighted significant losses, $9.3 billion in 2024, due to crypto crime, underscoring ongoing security challenges. Institutional interest continued, exemplified by BlackRock's further steps into tokenization and Eric Trump's strong call for banks to adopt crypto or face obsolescence. A tokenized Apollo credit fund also made its DeFi debut, showcasing the growing trend of bringing real-world assets RWAs onto blockchains. Market-wise, Bitcoin experienced its best week since November earlier in the period, but faced pressure alongside stocks following stagflationary US GDP data released midweek. The CoinDesk 20 index reflected broader market declines towards the end of the period. Analysis of crypto leaders' discussions, statements from key industry figures provided significant insights into current priorities and future outlooks. Ethereum co-founder Vitalik Buterin outlined a technical roadmap for 2025, focusing on core protocol improvements like single-slot finality for faster transactions, statelessness for scalability, and enhanced privacy, signaling a continued commitment to fundamental development over short-term trends like NFTs or meme coins. This focus comes alongside record user activity on Ethereum Layer 2 solutions. Coinbase CEO Brian Armstrong emphasized the global expansion goals for the base Layer 2 network, aiming for broad accessibility beyond Coinbase users. He also highlighted the potential of the partnership with PayPal to drive stablecoin adoption via PYUSD integration, leveraging PayPal's vast user base. Armstrong welcomed competition as a sign of market maturity while asserting Coinbase's continued leadership aspirations. Strategy Chairman Michael Saylor remained steadfastly bullish on Bitcoin, predicting it will become unaffordable once banks fully embrace it due to its inherent scarcity. He framed Bitcoin as a stable, predictable Newtonian network and continued accumulating BTC through strategy. His views positioned Bitcoin as a unique digital asset distinct from other tokens. BlackRock CEO Larry Fink, representing the pinnacle of traditional finance, strongly endorsed the transformative potential of tokenization, outlining a vision where all assets are digitized on blockchains. BlackRock is actively pursuing this through initiatives like blockchain-enabled shares for its money market fund and the expansion of its broadly tokenized asset fund. Fink's evolution from crypto skeptic to viewing Bitcoin as digital gold and Ethereum as a key infrastructure layer is a powerful signal of institutional acceptance. ARK Invest CEO Cathie Wood reiterated extremely bullish long-term price targets for Bitcoin, projecting a bull case of $1.5 million by 2030, driven primarily by institutional adoption, the digital gold narrative, and emerging market demand. While ARK reportedly trimmed some BTC holdings recently, Wood's overall stance reflects a strong belief in Bitcoin's disruptive potential, although these predictions are met with skepticism by some market commentators. Technical Analysis Summary, April 23rd to 30th, 2025. Technical analysis of major cryptocurrencies, Bitcoin, BTC, and Ethereum ETH over the past week reveals relative stability punctuated by sensitivity to macroeconomic news. Bitcoin, BTC per USD. Bitcoin traded largely within a range of approximately $94,000 to $95,000 for most of the period. Its 7-day performance showed a slight gain of plus 0.51% as of April 30th. A notable event was a dip towards $93,000 midday on April 30th, coinciding with the release of negative US GDP data, followed by a partial recovery towards $94,000. This suggests $93,000 as near-term support and $95,000 as resistance. TradingView's technical indicators presented a predominantly neutral stance overall for Bitcoin at the end of the period, reflecting the range-bound movement despite the brief dip. Ethereum, ETH per USD. Ethereum mirrored Bitcoin's pattern, trading mostly between $1,780 and $1,810 before experiencing a sharper decline on April 30th, falling below $1,750. It subsequently recovered to the $1,760 to $1,770 range. Its 7-day performance was also slightly positive at plus 0.29%. The recent low around $1,750 acts as potential support, while the $1,800 to $1,810 area represents resistance. Unlike Bitcoin, trading views technical summary for Ethereum leaned towards a sell bias following the dip, potentially indicating greater sensitivity or a different technical posture at that moment. Overall market technicals. The technical picture suggests a market consolidating after recent gains, susceptible to external economic factors, while the 7-day performance was relatively flat to slightly positive for both majors. The sharp reaction to U.S. economic data highlights the increasing correlation with traditional markets and the potential for volatility based on macroeconomic triggers. Fundamental analysis insights. Fundamentally, the past week reinforced several key narratives shaping the cryptocurrency landscape. The most prominent theme remains the accelerating institutional adoption and tokenization of assets. BlackRock's actions, including filing for blockchain-enabled shares in a major money market fund and expanding its BUADI tokenized fund across multiple blockchains, Ethereum, Solana, Avalanche, Optimism, serve as powerful validation from the world's largest asset manager. CEO Larry Fink's explicit vision for tokenizing all assets and his positive framing of Bitcoin, digital gold, and Ethereum potential backbone further solidify this trend. Complementing this, Coinbase's strategy, articulated by CEO Brian Armstrong, focuses on broadening access through its base layer 2 network and leveraging partnerships like the one with PayPal to potentially onboard hundreds of millions of users into the stablecoin ecosystem. This institutional push fuels the highly bullish long-term outlooks expressed by figures like Michael Saylor and Cathie Wood, who anticipate massive price appreciation for Bitcoin driven by institutional demand overcoming scarcity. Regulatory movements around ETFs, despite some delays, SEC on spot Dogecoin XRP, also show continued efforts towards integration, evidenced by XRP futures ETF approvals and South Korea's positive stance. The regulatory landscape, however, remains a significant source of uncertainty and a key factor influencing market dynamics. While there are hints of potential progress towards clearer U.S. crypto legislation, ongoing SEC scrutiny regarding staking, IRS data access, and enforcement actions persist. The mixed signals, approving some ETF products while delaying others, coupled with political complexities, like the backlash against a proposed White House crypto reserve, create a challenging environment. Positive regulatory developments could unlock substantial capital, whereas unfavorable rulings could impede growth. Core technology development continues to advance, particularly within the Ethereum ecosystem. Vitalik Buterin's focus on fundamental upgrades like single-slot finality, statelessness, and privacy aims to enhance Ethereum's scalability, efficiency, and utility, strengthening its long-term value proposition, especially considering the record activity on its Layer 2 solutions. The expansion of LUs like Base and the tangible progress in bringing real-world assets, RWAs, onto blockchains via projects like BlackRock's BUADI and tokenized credit funds are crucial fundamental drivers. Finally, market sentiment and macroeconomic links are increasingly apparent. While key proponents remain bullish, skepticism exists and negative news like crypto crime statistics can impact broader perception. Crucially, the market's reaction to US GDP data confirmed its growing correlation with traditional finance. Concerns about broader economic factors like US debt, voiced even by figures like Larry Fink, position crypto, particularly Bitcoin, within the larger macroeconomic discussion potentially as a long-term hedge, even if immediate price action remains sensitive to short-term economic news. Conclusion. The cryptocurrency market continues to evolve rapidly, driven by the interplay of technological innovation, institutional interest, regulatory developments, and macroeconomic forces. The past week highlighted the strengthening fundamental narrative around institutional adoption and tokenization, spearheaded by traditional finance giants, which provides a potentially strong long-term underpinning for the market. Ethereum's commitment to core protocol upgrades also bolsters its position. However, the market remains demonstrably sensitive to short-term macroeconomic news and regulatory ambiguity, creating volatility. Investors and observers should continue to monitor regulatory progress, particularly in the US, the pace of institutional product rollouts like ETFs and tokenized funds, and core technological advancements within major ecosystems like Bitcoin and Ethereum. While highly bullish long-term predictions exist, a nuanced approach acknowledging both the fundamental potential and the persistent risks and uncertainties is crucial for navigating this dynamic market. That's all for this episode. Please like, subscribe, press the bell notification, and leave a comment. This information is geared to enable you to make informed decisions. May your decisions be profitable. Thank you for tuning in. See you next time. I love you all. Bye for now.